You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is Friday. It is time to talk about some volatility. Luckily, you tuned in to the right place. Yes, it is time for Volatility Views, your premier program for volatility traders. My name, of course, Mark Longo from the Options Insider Radio Network. Reminding you of a couple of things at the top of the show. First off, if you're not subscribed to the full network, man, you are missing out on pretty much a dozen other shows coming at you throughout the week. And of course, if you want extra bonus, extra fun, extra info in your life, including not one, but two awesome pro Q&As this week, one of them potentially with some guy named Dr. VIX, then, well, actually, that was more of an options boot camp, but the pro folks got that early as well as options oddities, which you got yesterday, as well as all sorts of exclusives, giveaways, all sorts of fun. TheOptionsInsider.com/pro is the place to go to learn more as we learn who's joining us on the old Volatility Views program today. First, out to who knows where he is. Is he in the hinterlands of Chicago? Is he hanging out in the Volatility Lake House? Let's find out. He is Mr. Russell Rhoads, a.k.a. the once future and present Dr. VIX, now busy corrupting young minds at Indiana University. Mr. Rhoads, welcome back to the show, sir.
As always, thrilled to be here. I'm only teaching graduate students right now, so I'm corrupting middle-aged minds. How's that?
Oh, well, they're already partly corrupted anyway then, so it's not as bad. Not as bad. And then joining us for the first time this year, which is wild, I thought we talked to him more recently than that, is Mr. Bill Luby, now holding his hat, or I should say hanging his hat, as Chief Investment Officer over there at Luby Asset Management. Hasn't joined us since November of last year, so a lot to catch up with him. Mr. Bill, welcome back to Volatility Views, sir.
Great to be here, and nice to be back with some friendly and familiar faces.
Yeah, there's a lot of stuff popping off in the vol world these days. Not sure if you saw it, so we have a lot to catch up on. Let's do that now. A little bit of the old Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from about trading and trending and analysis and all sorts of fun perspectives. And as we're coming into the final vol views before America 250, what are we seeing on the screen? Well, we're seeing a very celebratory market, at least for right now. I mean, wait 5 minutes, that might change. It's been one of those days, listeners, where we're hot, we're cold, we're hot, we're cold. Getting a little warmer again. S&P up about 1/3%, NASDAQ up 1/3%, Dow up about 0.2%. And our good buddy VIX Cash was hanging out right at the 19 handle right before showtime, puts it up about 1/4 point. As of right now, is drifting towards 18 3/4 again, which would put it literally unched since our last show, which, as you'll recall, was not last week, but actually 2 weeks ago. We were off last week for the Juneteenth holiday here in the U.S. So if you just listened to Vol Views and came back 2 weeks later, you'd think, oh, heck, a lot of nothing happened in the vol market since our last show. Volley at about a 15 3/4, again, almost literally unched from where it was 2 weeks ago. And VVIX at a 93, down about 4 points out there. Of course, another little dust up over there in the Strait of Hormuz. Is it open? Is it closed? What's going on? Chips are being attacked. All sorts of fun, maybe adding a little bit of flavor to the market today, or perhaps just more buyers and sellers out there. Mr. Bill, as our guest, I want to start with you. We'll get to this week's fun in a second, but I'm curious, you haven't joined us since November of last year. I'm not sure if you noticed, but there has been this little ongoing dust up in the Middle East since the last time you joined us. I'm curious on your perspective on how vol played out heading into and now potentially coming out of this conflict, sir. Has any surprises for you there?
Well, I think we're almost exactly where we started before all this craziness happened. And what shocked me and the rest of the world is that the VIX never really got that too excited about it. Everyone, I guess, started discounting the possibility of a lot of crazy scenarios, and those started coming off the table. And no matter how many times things were off again, on again, the war was on, people were being bombed, we were about to run out of oil, the market seemed to look through that. So if you consider the market as a 6 to 9 month discounting mechanism, it had an amazing ability to look over the horizon and avoid some really nasty VIX spikes. I mean, we had a lot of turmoil underneath, but in terms of correlations and the overall indices and the VIX and other volatility indicators, a shocking calmness to my perspective.
Yeah, it did seem like the market really kind of just put this whole thing behind it very quickly, especially post ceasefire. They didn't even wait for this, whatever this document is now, to have been drawn up back in March. Like, oh, ceasefire, that's it, it's over. Kill the vol and rally the market. S&P up what? It was somewhere around 20%. I think it has given up some of that now from the highs, but still, it's been a nice run since the ceasefire. But let's focus our gaze now to this week, sir. Obviously, we're heading into another truncated holiday week. Kind of a weird period where we're coming off the heels of another truncated holiday week. What's catching your eye out there in the vol market this week, sir?
Well, now that we've met Warsh and he's become a hawk and an independent guy, I think people are taking a lot of Warsh Fed risk off the table. And it was fascinating how there was as much excitement, maybe even more, for the Micron earnings than Nvidia earnings. And that's behind us. And Micron and the memory group seems to be doing slightly well. But then the market's trying to figure out, okay, if they're making all this money, who's suffering and how much? And now we're generating this huge turmoil as to whether the hyperscalers are overvalued, whether we should knock off Microsoft and Apple because they're raising prices, they have cost pressures, and now the whole tech conglomerate. I think we're going to have to start to slice and dice, where everyone fits, and that's going to be an interesting process to see how that plays out.
Yeah, it was interesting to watch the Micron earnings because you're right. I would definitely say they were perhaps more closely watched than Nvidia for obvious reasons. The underlying swinging 100, 150 handles a day. It's hard to ignore something like that. But you're right. They had that blockbuster announcement. The stock's up huge in the after hours. A lot of people were thinking it was going to carry the rest of the market along with it. And you're right. We didn't really see that. It was kind of a Micron only rally. Every other tech name, for the most part, got a bit of a drubbing or were kind of flat yesterday. So yeah, an interesting response to Micron, because you're right. At the end of the day, someone has to pay those ridiculous markups that they're charging out there. So their great numbers, maybe not great for the rest of the tech scene. Mr. Rock, I almost said Rock Lobster. I apologize. Mr. Rhoads, sir, what's catching your eye out there in the world of vol this week?
Well, everybody's kind of conditioned to buy on weakness on the S&P 500, which means sell volatility when it spikes up. And years ago, there was a really smart guy that said, it was asked, I think it was in an RMC actually, was asked, what's it going to take for VIX to, really start to make a move to the upside, because it kept doing the whack-a-mole type thing. And Bill, you said it was going to take a second spike that wipes some people out. And I would not be shocked. I mean, we seem to be teetering on that off and on in what's supposed to be a quiet time of the year. And the high-low range for the S&P this week is only about 3%. I don't know if that justifies a 20 VIX. I really don't. So I often talk about the behavioral aspects around VIX and how Sometimes it's anticipating something's getting ready to happen, and sometimes it's just reacting. I feel like we're in an anticipatory mode right now. And some of the trades that I've come across appear to be prepping for that one as well. I am, because you mentioned earnings, I am fixated on Microsoft's earnings that'll come out in late July. It's their year-end number. You've got to be more certain with your year-end number. Microsoft is Nvidia's biggest customer, and they're on a pace to go cash flow negative if they keep spending money the way that they're going to spend. So they're going to have to address this one way or another. I feel like if you've got to try and pick what might be the next volatility event, I think Microsoft's earnings at the end of July are something that I'd be very concerned about this summer.
Are you seeing that means they might have to cut back on some of the CapEx or show some conservatism?
Exactly. Or they're going to have to raise money to do so. And again, I know I'm deviating a bit off path here, but Google recently issued shares to help pay for their AI initiative. And in the academic world, we teach that in order of how you want to pay for things, use your own cash, put out debt, or issue equity. And equity is usually considered a negative signal, which means people aren't lending money to them for their AI initiatives. We'll see how this works out, but I feel like the VIX being closer to 20 than 15 most of the time, even though we're 4 or 5% off the all-time high, that's all about just waiting for some sort of shoe to drop and making sure that you're prepared for it.
You are correct. We did kiss a 20 handle again this morning in VIX Cash. I know we did that earlier in the week as well. A lot of people got excited on Vol Twit. They were reaching out saying, oh, we're going to have a visit from the Loggins on Vol Views this week. Alas, no Kenny on the show today, listeners. He's still got to hang out in the green room. He knows the deal. 25 or bust for him, and we are not quite kissing a 25. That might change second half of the show, but for right now, unfortunately, no. I would love a little danger zone right now as well, but we're not quite there yet. But Bill, are you picking up, I should say, what Russell's putting down over there about all these mega caps on top of everything else you just mentioned now having to issue new shares? And does that give you a pause like it does Russell, sir?
It does. It's interesting. I've been worried more about Iran and oil, but with crude down in the 60s now, which may be cheap protection in of itself if you want to buy, crude calls. I do think that we've got to sort out this whole CapEx thing. I mean, is it? And it looks like some of it's locked in for a year or two, maybe 3. So someone's going to flinch. One of the big players is going to flinch and just say, okay, 27 or 28 or whatever year they decide to call out, I'm going to cap it. I'm not going to raise it, or maybe I'm going to cut it back. But that's kind of admitting defeat in this arms race. And so then you go down the financing questions that Russell talked about. And, if we all end up with raising equity for this, it's going to be a little scary, I think. And that's going to, I think, shock the market a fair amount.
Just one thing I wanted to kind of just piggyback on, because you said, maybe if you want to hedge, you should be buying crude calls. I was at a conference recently, and they've all kind of convoluted in my mind, but I was at a conference recently where the talk around the risks that are floating around in the world, instead of hedging your equity portfolio, hedge that risk. If you're worried about high oil hurting the stock market, we'll buy oil calls. If you're worried about the tech stocks being what brings us down, this may have been a SIBO conference because they have that Mag 7 index or that Mag 10 index, and they may have been talking about that. But specifically, if you're worried about the tech thing, be looking at NDX options. If you're, and if oil's the thing that's got you concerned, if you're worried about inflation, I know gold's expensive, but maybe you look at some assets that benefit from inflation as opposed to just hedging what you think will be the stock market reaction.
I like Bill's point. Someone does have to flinch eventually. We've been saying that for a while here on the show. It seems like somebody has to flinch. So far, nobody's flinching, but we'll see. Maybe some of this weakness we're seeing in some of the NASDAQ in particular of late, maybe that's not quite a flinch, but maybe it's a little bit of a shirk, we'll call it, for lack of a better word. Is the vol market, is that out there shirking today? Are they shucking and jiving? Are they putting up volume? Or are they kind of just going to sleep? And unfortunately, it seems like it's the latter, listeners. Again, it is in between two truncated holiday trading weeks, so maybe you can't expect a banger all the time. Today, 176,000 contracts on the tape in VIX land. That ADV also coming back down to a more seasonally appropriate 721,000 contracts. That puts us down about 76,000 contracts from this time on our last show 2 weeks ago. Again, middle of the summer holiday trading time, not exactly a banger usually for the vol market. So the fact that we're even north of 700K is actually still mildly impressive. Cost you 155,000 contracts to break into the top 10 today. That gets us to the Nov 60s. By the way, we are still hanging out at that structure that we have been locked to for the better part of the last few months. 9 calls to 1 put. Let's see if we can find that 1 put. Certainly not number 10. That's the Nov 60s, listeners. 155,000 of those. Number 9, $1.56 of the AUG 50. So if those Nov 60s too far out and too far up for you, allow me to present number 9, the AUG 50s. Number 8 is our first and only puts in the top 10. It's the July 16 put. So maybe, Russell, we've been debating for a long time. What is the new 15 put? Is it perhaps the July 16 put, sir? You think that's made it? Is that the new 15 put, sir?
I don't know if that's the new 15 put. I actually have a trade using the 14s that we're going to talk about.
Oh, okay. I don't want to steal your thunder. We'll save that in a second, but I am intrigued now, listeners, as well. I don't like to look ahead at Russell's trade. Sometimes I like to be surprised along with you folks, listeners. All right, let's go out and let's do the rest of the top 10, then we'll get to Russell's crazy downside in VIX. Number 7, $1.86 of the July 45s. Number 6, $1.90 of the AUG 50. So again, maybe those Nov 60s, AUG 50s not doing it for you. How about number 6, the AUG 50s? Number 5, $1.92 of the July 35s, followed by number 4, $2.68 of the July 25s. I think there's some vertical action there. Number 3, $2.68, right back to the fun of the July 65s. Number 2, 297,000 of the AUG 65. Man, there's a lot of love for 65s and 60s this week. And then the big dog on the board right now, 299,000 of the AUG 35s. But you know what? Russell teased us all. So it is time to get there now. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads. The song's so nice, we are legally obligated to play it twice.
No.
Mr. Rhoads, sir, what you got for us, including some tasty downsides, sir?
Yeah, some tasty downside. All right. Okay. On Monday, this is just a terrible trade. On Monday, with VIX at 1850, somebody sold 400 of the June 24th 18 calls for 26 cents. And they bought the 22 calls for 6 cents and took in a 20-cent credit. This was an opening transaction. The settlement came in at 19.40, so this would have been $1.40 against them. However, it looks like they covered their short call at $1.40 on Tuesday afternoon. So it looks like they exited the trade the next day and took the loss on it. But it also looks like they're not done, and I'll get to that shortly. Also on Monday, that's
a quick ouchie for you, sir. 26 cents.
It is a quick ouchie, but I think they're coming in with their revenge trade. They're doing it again for next week, but they just did it today. I'm going to stick in order here. All right, on Monday we have the VIX at 1733. Somebody bought 100 of the July 1st 21 puts for $3.24. And they sold the 20 puts at $2.36. That's a typo in there. And the net cost there was 88 cents. As long as they get July 1st settlement under 20, they'll make 12 cents off of this. I on an illiquid week where you never know what's going to go on in the world, I just would be, we talked when I did the ProQ or did the option block. earlier this week, we talked about don't hold trades into settlement. To make money off this trade, they're going to need to hold it into settlement and hope that we're under 20. Maybe we will be because it's in front of a holiday week and we know what that headwind looks like. I don't, risking 88 cents to make 12 cents in something that can double overnight. I'm just not a fan of that. All right, on Tuesday with VIX at 1940, somebody bought 100 of the June 24th, 14 puts for a penny. Not sure, I guess they were hoping for something to happen overnight. Who knows what. And then also, and here's a big one, on Tuesday with VIX at 1865, somebody bought 10,000 of the July 1st, sold 10,000 of the July 1st 19 puts for $1.
So right, we're starting to get some of that weekly flow back again. We had those big prints, and then that was it.
And this isn't the only one in the thousands. On Wednesday, with VIX at 1860.
Before you roll on, what do you think of that one? Drawing a line in the sand, 19 by July 1st for $1.
I think 18 by July 1st makes a bit of sense, which is their break even on it. I don't know what they could have gotten for the 18s instead. But I feel like the whole market feels so hair triggerish right now that I don't have a problem with having long VIX positions on. I have a hard time, even if the stock market kind of settles in and acts like summertime. I have a hard time thinking that trade's in danger of losing too much.
Yeah, I don't hate it. I don't know if I love it, but I don't particularly hate it either. Yeah.
We're hovering around 19 right now, so they're looking smart so far. Let's see. Wednesday. VIX at 1869, the biggest weekly trade I came across. Somebody bought, and it's the 17 strike is the new 15. Somebody bought 13,000 of the July 1st 17 puts for 16 cents. That was with VIX at 1869. And, everybody's been having these opportunities during the week where we always seem to have a little bit of an elevated VIX. It seemed to happen 3 times this past week. And we see trades like this taking advantage of it. And by the time we reach Friday, they're already looking pretty smart on it. Not really looking that smart on it right now.
Those two guys need to get in a room together, the July 19 put and the 17 put guy. They could have an interesting conversation, I think.
I actually thought that as I was putting this together. I was like, the exact opposite right there. And just a couple hours apart. And definitely not related to each other. So VIX on Wednesday, VIX above 20. Somebody, I don't know if it's a panic trade or what. They bought 5,000 of VIX July 1st, 21 calls for $1.05. There's a lot of speculation on what's going to happen between now and next Wednesday. Thursday, and this I'm bringing out all the stops just because I know we're off next week and I want to send you off on your vacation with just great stuff.
Yeah, arm on people Thursday for America 250 with some fun trading info, sir.
Exactly. With VIX at 1878, and it really doesn't matter. Somebody bought 700 of the July 29th, 100 puts for $80.56. They sold the 50 puts at $30.88. Net cost, $49.68. As long as settlement is below 50, they will make a whopping 32 cents off of this.
Before you keep going, I want to ask Bill his opinion on this because you and I have joked about these in the past. Yeah. But Bill, I'm curious, what are your thoughts on this particular use case of VIX options? We've seen a lot more of this.
We see a lot
of it. All of a sudden, really, really deep in the money puts, kind of the hot thing in VIX land. Sometimes there's spreads, sometimes they're straight up. But what are your thoughts on this particular use case for VIX options, sir?
I never trade anything like this. But did you say that was a 32-cent net? Or
they had to pay for it because they bought the puts. It's a $49.68 cost to make 32 cents by the end of the month. And here's the issue with me, and I'm the first person in the world that I'm supposed to be an expert in everything, but I've never really been good at margin. It's just I didn't enjoy it when it got thrown at me in college, and I've never really worried about it much. I let the broker calculate it for me, and I know what the number is. Backing into it was always kind of a nightmare for me. I could always get close, but I could never exactly nail it. If I knew what the margin was on this thing, it would be, and it's got to be pretty low. because of how far out of the money, it's got to be something like a tenth of the actual cost or something to make sense. So if somebody's able to do these things and only put up $4 or $5 to make 32 cents over the course of a month, that makes sense.
Yeah, that's got to be the key. You can't be outlaying a ton.
There's a margin situation in these, and we see these a lot, Bill.
Yeah.
We see a lot of them. We saw one that we followed for 7 or 8 months that ended up making about $3 off of buying. I think they bought the 200 puts. And again, it had to have been a situation where margin makes that $3 profit over a 6-month period make sense. So
for 700 contracts, I think of myself in terms of core capital, risk capital, and sometimes it's entertainment capital. And this is the kind of thing I would put on with my entertainment capital, just to watch and see what happens.
And see what happens to it. Yeah,
because it'd be fun, So for those dreary like July days and those 4-day weeks when nothing's happening, it's like, what the heck? It'll keep me awake. I'm not a huge fan of the trade, but if it doesn't chew up all your buying power, it could be fun for some easy money.
We see them over and over again. So there's and I need to, since I won't have Mark Longo asking me to do anything next week, I'm going to look into it. Last trade.
I'm going to steal that phrase, Bill. Next time a trade goes against me, that was just entertainment capital. I was just paying for my entertainment. I like that.
I like that. My entertainment capital is paper trading.
Keep a separate P&L for that.
All right, real quick, because this is the follow-on to that 18-22 call spread that didn't do real well. This morning, somebody put that trade on in a little bit bigger size than before. They were able to sell 3,000 of the July 1st, 18 calls for $247, and they bought the 22 calls for 62 cents, taking in $1.85 credit. I sure like that better than the 20 cents to and risking 380. So this one does make a bit more sense as well. We'll see how it works out. And that's it. A lot of July 1st trades that seem to be focusing on settlement.
Makes a lot of sense. Get out by July 1st and go celebrate America 250 coming up pretty soon, listeners. Before we get there, we got to run through some more VIX flow this week. And spoiler alert, there isn't a ton of it, as you might imagine. Seems like some folks have already left for the holiday sojourn. Today, like we said, pretty light flow out there in VIX land. Only about 176,000 contracts on the tape. The big dog out there, such as it is today, is about 20,000 of the July 17 puts. We're always joking here on the show. What is the new 15 put? The thing that was just dominating the tape every single month last year, and pretty much all of them died worthless. Maybe the 17 put is your replacement, listeners. If you're wondering, they were going up for about 43 cents this morning. The rest of the stuff is pretty light because we got looks like a July 2023 vertical going up for 7,000 times, and also maybe a bit of a roll to AUG, also 7,000 of those, but really not much else going up out here today, listeners. Yesterday, not much more on the tape. Again, it is summertime, listeners. 383,000 contracts on the tape yesterday. I mean, we see that in the one trade sometimes in VIX, so that's pretty light. The big dog, such as it was, 30,000. Once again, 2 for 2 here of the July 17 puts. So apparently that's your strike and option of the week, listeners. If you're wondering, yesterday, 53 cents. So it cost you a little more yesterday. Number 2, 29,000 of the July 25s. Number 3, 25,000 of the July 19 puts. Number 4, 19,000 of the same strike going the other way, the July 19 calls. And number 5, 15,000 of the AUG doubles. Wednesday, a little bit more paper on the tape, 527, starting to get a little more respectable. The big dog on Wednesday, 64,000 of the July 16 puts. Followed by number 2, 34,000 of the July 16 half puts. Number 3, 27,000 of the July 25s. Number 4, 22,000 of the July 17 puts. That's what our buddy Mr. Rhoads is talking about. Those are expiring on the 1st. So those are in the weeklies, a total of 22,000 on the day. So that's a pretty sizable print. And number 5, 17,000 of the July 20s. Tuesday, like we said, even more paper on the tape on Tuesday. 661 on the tape. That's your total. Again, not even hitting the ADV, but getting a little closer. The big dog, 130,000 of the July 35s. If you're wondering, that was closing. No love there. Number 2, 89,000 of the SEP 35. So if you're wondering, is it time to do your July SEP 35 roll? Apparently the answer was yes on Tuesday. Number 3, 50,000 of the July 25s. Number 4, 40,000 of the July 16 puts. And number 5, 21,000 of the SEP 17 puts. Monday, kind of a light day as well. 465 on the tape. The big dog on Monday, 90,000 once again of the July 35s. So that was 2 days in a row for the 35s taking the top spot. Number 2, 89,000 of the AUG 35. So a lot of rolling and calendar action on the 35 strike, it seems like this week. Number 3, we fall off quite a bit to number 3, 21,000 of the SEP 23s. Number 4, 15,000 of the SEP 17 puts. And number 5, 12,000 of the SEP 24s. Mr. Bill, you heard us break down a whole bunch of weird and wonderful VIX options flow. Anything catch your eye out there in the world of VIX options this week? And also, how much are you watching the VIX options these days? How much of a role do they play in your day-to-day over there at Luby? Or is it more just, as you put it, entertainment capital, sir?
You know, I actually trade the VIX futures options more, the VXX and the UVXY. I love the cash element of the VIX. But the Tuesday, Wednesday just never seems to be the appropriate time frame for me. And so I often use, SPX, or I use the VXX options are probably my 2 favorites. So I don't follow the VIX as much. I'm really intrigued by all this put action. I'm fascinated by the put action. I'm going to spend a little more time investigating that. But so, yeah, and we were talking, I think Russell was talking earlier about trying to be specific with your hedge, rather than just hedge the broad index, SPX, or using VIX, but to either break it down to the Qs, or in my case, distinguish between software, semis, and the hyperscalers. And, do you want your protection to be in the semis when that's really, the risk, the momentum risk, if you will. So, yeah, I've been really drilling down on, stuff like that, and even like the DRAM memory ETF to try and micromanage my biggest exposure. And of course, a lot of my exposure comes from just too much appreciation in the memory space.
Russell, I think we've done a disservice to Bill. We've lured him to the dark side of deep in the money puts and put spreads in VIX, sir. He's going to come back on the show 6 months from now. Have you heard the gospel of 100 handle puts in VIX?
200. 200.
Yeah, we had 200 in the past. You're right. We have gone pretty big. Mr. Bill, you just touched on this. I want to hit on this right now. I saw this come up in our chat a few minutes ago. This came from, who asked? This is Option God. He wants to know, what is Bill's primary trading vehicle at his firm? Is it all VIX options, VIX futures, or something else like VXX? Sounds like he hit the nail on the head. But you kind of just broke it down. But if you want to give our listeners a quick overview, what do you do over there at Luby, sir?
Well, Luby Asset Management has actually been wound down. I kept my worst client, also known as my wife, but the rest. So it's not open to the public anymore. But my personal trading, which has always overlapped somewhat with what I did at Luby Asset Management, my favorite bread and butter trades involve VXX options, and vertical spreads more often than not, calls, puts, whatever. But those are my favorite. But I do play a lot in sector ETFs. I do play a lot in the indices, and it's a broad range of ETFs. But VXX and VIX will always be my North Star, if you will.
I think I see your problem, sir. I think you need to reopen the fund and just change the name. Now just call it Entertainment Capital, and bam. Everyone's going to line up. And they also know if you lose it all, they don't care. It's Entertainment Cap. They had fun, right?
Yeah. Well, funny you should mention, I was going to call it what's the Sisyphus Fund. And I thought people would find that humorous, but I wasn't sure to what extent I'd need people with a sense of humor. At least one person.
I enjoy it. I enjoy a good Greek mythology joke, though. I'm not sure if I speak for the masses out there. You could have gone Tantalus, could have gone a lot of different ways. on that one, sir. But I digress. We'll have a separate podcast, Bill and I, going down the Greek mythology rabbit hole. Instead, let's keep going out here to a little bit of the vol ETPs. We usually save it for last, but because you said it's your favorite and most beloved product under the sun, we'll go there next. Let's go out to the realm of VXX. As we were kicking off the show, it was right around 23.5, down almost a full point, about 0.85. As we rack it right now, it is down probably about a full point. Putting up a little bit of flow today, 35,000. Not exactly lighting the world on fire. The ADV, though, moving in the right direction, which is not something we could say for every vol product during this midsummer malaise. The ADV is 58,000, up about 10,000 a day. That's all pretty much because of Bill. He said he's focusing 100% on it right now. If you're wondering what is the hot contract in VXX today, we're going out to the weeklies expiring next Thursday, listeners. It's the 24 half calls in July. 4,000 times they went up this morning for about 51 cents. Also, we got a June 24 half, so maybe we got a bit of a weekly roll. Those went up 2,800 times out there. So, Mr. Bill, you said VXX is your favorite. What are you up to out there, and what's catching your eye, sir?
I do think we're in a little bit of a VIX mean reversion period for some of the things I talked about when we opened here. And selling the at the money or slightly out of the money VIX call spreads is something I like to do on short weeks when I think vol's overpriced, or when I'm looking at some of the adverse scenarios coming off the table, or even just historical vol, pretty much in the 17s and most of the things I look at, recent historical vol, and I'm looking at some sort of reversion to the mean play. So that's kind of my VXX sweet spot.
You have anything on right now, sir? You want to share with the folks any trades cooking?
Yeah. You're talking about specific numbers?
Just to get ballpark, how you're approaching it, strategy. You could say I'm long, far out of the money puts and, or something like that. Or I'm looking at, call spreads. You don't have to say exact strike and numbers if you don't like it. It's just you and us talking. There's nobody listening here. Don't ignore that Russell guy.
Call spreads relatively short term, at the money or slightly out of the money. So think 24, 26, 24, 25, 1, 2 weeks out, that sort of thing.
And how much of a move do you usually like to see before you like to monetize those? Because that's the challenge, obviously. We talked about this many times. Monetizing upside in any regard is usually pretty challenging. How do you go about monetizing those?
I'm good with half. I'm typically gone by 80% of the potential max, but I sometimes hang around and regret it. I do like to be out a day in advance or same day, depending on what's on the calendar.
That's why I love the vol space so much. People might say, how do you talk about, VIX all every week and stuff? But A, there's a lot to talk about. And B, everyone has a different approach, a different flavor, a different product that you like. You might live in the inverse vol realm. You might live in VXX. You might live in VIX. You might live in, trying to get vol the old fashioned way, I should say, straight from the S. A lot of different ways you could play in the vol space, which is what makes it interesting. Maybe you just live on the VIX futures term structure. You're a psycho. You like that. You like your mullets and your Tulums.
And one quick thing, the amazing thing about it is whether you're right or wrong, you can be right or wrong for whatever your time period is minus 1 day, say 3 weeks, 3 months, whatever. You can be wrong every day and then right all of a sudden, or right right the entire time period and then wrong, because you held it 1 day too long. So it's really interesting from a risk management perspective.
I would say probably like 8 to 10 years ago in some of the earlier days of the show, people would ask me, is there one kind of set it and forget it type trade in the market that makes money 9 times out of 10? You don't really have to do anything with it. And I would always come back to long-term VXX puts because it was kind of a less heralded trade at the time, wasn't quite the crowded trade it is today. And it was as close as you could get to a set it and forget it 1 year, 2 years out, however far you want it to go, whatever your time horizon was. Even people who were relative novices to the world of vol could wrap their heads around that. Lo and behold, it's changed a little bit. VXX moves a little bit more now. The vol space a little bit different, and also it's a little bit more of a crowded trade. So I don't know if I would recommend it anymore as much as of a set it and forget it trade as it used to be. But it still is intriguing for a lot of people. Mr. Rhoads, I know you've never been high on the VXX camp. You've always kind of looked at it from afar. What are your thoughts on VXX these days, sir?
Actually, the way I use it is the way Bill uses it, and I learned it from Bill. I mean, really, that's when you get a spike in volatility and I want to fade it, I sell a call spread on VXX. So there. I don't hate VXX. I just don't use it from the long side very often. And I had a really nice systemic approach that I probably should revisit when it made a certain move intra-week. You could sell a call spread, and 9 times out of 10 you'd be okay with it.
So you're admitting live on the air, you just rip off Bill for all of your trading ideas. That's what you just said.
No, Bill does the same thing, don't you?
Yeah,
he's selling call spreads. We're both. I totally picked up on selling VXX call spreads more than a decade ago because Bill talked about it.
Well, Bill, it must have been challenging over the last few months because outside of a couple of dust-ups with Iran and a few meltdowns in the market, we haven't had a lot of vol upside to really monetize of late. In fact, Russell was breaking down the show not too long ago. Outside of this past week where we kissed the 20 level a couple of times in the cash, outside of that, we haven't seen a lot of 20 handles in VIX land of late. Have you just been sitting on your hands in VXX, or are you looking at something else?
Now, actually, this year I've traded more crude and gold probably than I ever have in my life. So that's been interesting. And even some Bitcoin options. It was interesting because at one point there were so many different things that were, quote, safe haven trades. And they almost all seem to have disappeared, with the exception of maybe VIX. And even that, doesn't seem to respond the way many people think it should be. So I've always traded heavily in treasuries, oil, gold, and other things that are, potential safe havens. I'm not really a dollar. I'm not really a Forex guy, but yeah, when one is active, or when I think the risk is more debt or more international relations, then I might shift away from VIX and try and narrow down my specific area of concern into some of the commodities.
Uh-oh, Russell. It sounds like Bill's angling to steal your guest spot on This Week in Futures Options, sir. It's going to come on, talk crude, gold, all that other fun, sir.
Bring him on. I'd love to hear what other people think about it.
I could be crude with everyone else.
Oh, there we go.
Yes,
I like that. We're big fans of bad puns here on the network. Let's go out to the realm of inverse vol, where Russell likes to hang his hat. And a lot of people like to hang their hat these days. 22.5 when we kicked off the show, up about 0.6 of a point, and still pretty close to that right now. The lament we've had since the launch of these products has been the options just don't really do a lot of flow. Doing about 3,500 contracts today, which is exactly halfway to their newly lower ADV of 7,000 contracts a day. So yeah, I've talked about this on our pro chat and stuff too on our oddity show. Just it'd be nice to be able to overwrite against the SVIX that I have right now. It's not really feasible for the most part because the markets are garbage. So you're overwriting and you're giving away upside for literally nothing sometimes. So it's not really worth it. It's hard to do spreads. It's hard to do much of anything without any sort of real liquidity. Mr. Bill, I know you like to hang your hat in VXX. Do you play it all or watch SVIX at all, sir?
I do, but I, like you, are concerned about the lack of liquidity. We really need to rally VIX Nation here to get them involved in SVIX options because it's a great product. The underlying is, and unfortunately, when you get fortunately, it makes for some interesting pairs trade because of how badly it does when we get a lot of volatility. So if you're pairing up SVIX and VXX, you can find some really interesting things when both go down dramatically at the same time. So it's a really interesting product from a risk management perspective, and also it's can be fun to sell puts sometime.
Yeah, I tried selling some puts early on in this conflict when vol got a little bit spicy. And then I quickly washed my hands of that and said, I'm just going to have to just buy the underlying. Like a heathen, like a savage, just buy the underlying because these options are garbage. Mr. Rhoads, sir, what's catching your eye in the world of inverse vol this week, sir?
I already bought my UVX for the weekend.
I haven't gotten to levered vol yet. We'll get there next.
Oh, I'm sorry. So, Invert, I haven't done anything in that space, apparently. There's some great commentary for you. I'm already on vacation. If you're going on vacation, I'm going on vacation as well. Right?
I'm the one who's supposed to be already had my head halfway out the door, and instead you're giving me UVX for SVIX and then nothing. All right, I appreciate it.
I don't know, man.
So do you have?
You know what? At this point, everybody that's listening knows what I do in this space, and I like to own SVIX for the long haul. And I like to have long volatility with UVIX buying on Fridays and selling early on Monday on a pretty regular basis. And
are you like me? Do you resist doing the overriding, or have you been overriding your SVIX, sir?
I haven't been overriding.
Yeah, exactly.
I've goofed, or I started to use a different word here. I've messed around with it a little bit, and I should just consistently hold it because that's my intent. And my portfolios, I've been going through some changes on how I do some things. I'm always long individual stock option volatility now. So I need to add that. I probably need to have more SVIX in my portfolio. I've been benefiting from how the market's been behaving, but we go through a quiet period, that's going to hurt me.
And your beloved UVIX, as you said, 3.5 for right now, down about 1/3 of a point. Again, this is since our last show 2 weeks ago. So how often do you see UVIX moving just 1/3 of a point in 2 weeks? Not often. 43,000 contracts on the tape. The ADV is 50,000, so it seems like it might get there these days. And we'll throw UVXY in there as well. Why not? UVXY 27, down about 2 points from where it was last week. Putting up about 24,000 contracts today. The ADV is 38,000. That's moving 2,000 in the right direction. Bill, are you a big levered vol guy, either UVIX or UVXY, sir?
I actually like those products a lot, and I like UVIX once it'll reverse split and give us some different strikes to play with. So that's why I tend to drift at VXX and UVXY. But yeah, I mean, they're huge. They're interesting from the whole compounding decay aspect. When vol spikes, they do some interesting things. So I enjoy them, and of course, when you get a fair amount of contango decay, they can be interesting too.
UVIX, when it's $3, the underlying is the option, sir. You just go in and you roll the bones and you have a good time. Just like we always have a good time in the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we break down. Well, first off, let's break down what these markets are up to at the end of the show. And, coming into the end of the show, we're seeing the Dow pretty much tilting towards the red. S&P up, but not up as much. So maybe the rally is starting to fade a little bit out there. And so it's up about 0.1% or so. And the NASDAQ up about 0.1%. And our old pal VIX Cash still coming back down the other way, but maybe if we wait 5 seconds, that will change. We're hanging out at an 1886 right now, which will not please our guest from 2 weeks ago. 2 weeks ago, it was myself, it was the Greasy Meatball, and it was our good buddy, Mr. Henry Schwartz, the Flow Master, over there at SIBO. He was at a 19 even, which might be looking pretty good in a couple of seconds if I buy him some time. We're at an 1886 right now, so he is close. The Meatball was doing his palindromic nonsense at 1661. I was feeling a little more juice. I was looking pretty good earlier this morning until I wasn't. I was at a 2035 out there in the cash, and we got there today and then some. So I was looking good until I wasn't, listeners. But we'll see. Maybe if I buy the Flow Master a few minutes, we'll see if I can get him a bullseye. 1884. We're going the wrong way for the Flow Master out there. All right, so let's go around the horn. Bill, you weren't on the show with us 2 weeks ago, so you did not have a chance to swing and miss like the rest of us, even though the Flow Master looking pretty good right now. What are you feeling for vol this time? Not next week. You've got a difficult challenge. You got to go out 2 weeks, sir.
Actually, that makes it easier. Because I was thinking 17 mid, 17 high, a little mean reversion. And so in honor of the 250th, 1776 just seems to fit right in there.
I like it. 1776. Mr. Rhoads, you weren't on 2 weeks ago either, so you didn't get a chance to swing and a miss. Are you going to tell me Gretchen is also feeling historically appropriate, sir?
Well, I tweaked Gretchen by a penny to make it 1876.
Oh, okay.
She said 1875, but I was like, and then that's why people can't see us, but the second Bill said 1776, I just started hooting and hollering over here at the lake.
I thought you were going to say 1812 for a second to keep it historically appropriate. But,
no, it's 18.748, but I'm adding a penny in there.
So you want 1876?
I want 1876.
76. Okay, I want to make sure.
But I'm also including all of this so when it's a bullseye and I tweaked the model. That's when the machines are going to rise up and Gretchen will be their leader.
I get you. You're just trying to cover your bases.
These humans aren't listening to us.
Poor Flowmaster. We keep moving away from him. 1880. Nah, it's not going to happen, Mr. I tried to buy you some time. Nice guy that I am. But unfortunately, no bullseye for the Flowmaster. But maybe there will be one for me in 2 weeks because I'm coming in at 1956. All right, that music means we have come to the end of our sojourn through the world of Vol this week. Remember, America 250 next week. I will be traveling. No live shows on the network next week. Doesn't mean we're going to leave you hanging, though. Network's not going to be dark. Stuff's hitting the network literally every day, sometimes twice a day. Some of that stuff's already hitting on the pro side. You folks in the pro have been just deluged with an embarrassment of riches of late. So enjoy all of that, including you got to listen live and get early access to Russell's and my deep dive into all things Vol earlier this week. But Mr. Bill, I appreciate you joining us for your once, apparently, I think we're on a 7-month schedule with you, sir. So we'll look forward to talking to you again in 7 months. But
I'm starting to show already for my next visit.
There we go.
Just a little bit.
There we go. But before we go, sir, if folks are intrigued, they want to check out any of your Vol musings online, maybe talk about Entertainment Capital with you. Where should they go? What should they do?
Best place to find me would be on Twitter at Vixen War. The blog still exists. It's there for archival purposes if anyone wants to run their AI through it and screw up their trading.
There you go. Archival purposes, VIX and more. Good stuff over there. A lot of nuggets to be found in that archive. And Mr. Rhoads, if folks want to check out perhaps your archive, where should they go? What should they do?
Follow me on Twitter. I am really close to adding to that weekend stuff. I finally got the data cleaned up and looked at using VIX futures instead of the ETPs for that weekend stuff, and the results are mixed right now. It might end up being an either or thing, but not one that's better than the other. One has worse drawdowns but makes more money. So pay attention to that. That'll be out before you see me again for sure.
You can follow Russell, of course, 2 S's, 2 L's, RHOADS is the place to go on the old Twitters to kick the tires and light the fires. That's going to do it for us. Have a great America 250 next week, listeners. I'll be, I think, in England at the time, so how appropriate is that to be celebrating America in the place where we battled to be free from? So interesting stuff. I'll say hi to a Brit on 4th of July, just for all of you out there. And then back again on Volatility Views in 2 weeks. See you then, and stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.